Internal Revenue Service IRS Tax News. Working virtually. Make a plan for protecting data and reporting theft. Part 5 of Security Summit Tax Tips for Tax Professionals. IR 2020-184, August 18, 2020, Washington. The Internal Revenue Service and Security Summit partners today reminded tax professionals that federal law requires them to have a written information security plan. Amid continuing security threats during COVID-19, the IRS, state tax administrators, and the nation's tax industry, working together as the Security Summit, also recommended practitioners create an emergency response plan should they experience a data theft. Contacting the IRS is step 1 in the plan to quickly protect tax professionals and their clients. Making a plan for protecting data and reporting theft is the last of a 5-part series called Working Virtually, Protecting Tax Data at Home and at Work. The Special Security Summit initiative spotlights basic security steps for all practitioners, but especially those working remotely or social distancing in response to COVID-19. So they've been emphasizing this year, of course, with the security, everything. A lot of things have been going online for some time. The IRS has been wanting their information online. They want the payments online, which means more banking information that's going to be online and whatnot. But now they're obviously more concerned with firms that were usually centrified, meaning or they had a central location where most of the work was done in a central location, to now being split up where more work is being done remotely due to COVID-19, and making sure that people are safeguarding that added security risk of basically logging in from a remote location into the central server location. So that's going to be one of the added features of the current environment that is of concern. So back to the text. Quote, COVID-19 has changed the way many of us work, and more tax professionals are working from home. With these changes, there are new risks from cyber criminals. Our Special Security Summit series was designed to give you critical information, protect your clients, and protect your business, end quote, said IRS Commissioner Chuck Reddick. Quote, we all have our role in protecting taxpayer data, and the tax professional community is a critical part of that role, end quote. Reddick added, quote, it's more important than ever to take appropriate security precautions, protect remote work sites, use two-factor authentication, and plan ahead for all possibilities, end quote. Tax pros create a security plan to meet FTC requirement. Federal law administered by the Federal Trade Commission requires all, quote, professional tax preparers, end quote, to create and maintain a written information security plan that is appropriate to the firm's size and complexity. And that really is kind of the key here, because as you scale up, obviously the security risks become much greater because you have more people that are accessing, the central network and the central data. So it's really, it's really kind of complex to think about sometimes, how much security you need as the firm is growing, how much, what might be the different plan that you might have from a smaller firm to a larger firm. What kind of plan would you need from a firm that's going to be completely networked within an office place that had the work all done within an office place to one that's going to be expanding outside the office place where people are going to be logging in remotely a lot more to a central location, to a central network. So back to the text. In addition, the FTC required information security plan must be appropriate to the nature and scope of the company's activities and the sensitivity of the customer information it handles. A plan for a sole tax practitioner would differ from a multi-partner global firm. So again, a sole practitioner, of course, would still want to have the plan there, but of course that plan would be much different than a multi-global firm, or a firm that's going to be very large with many employees, which again are going to have a lot of different access points into the main network, and therefore more security threats possibly from more sites that are going to be logging in to the data. So the tax professional working from home must ensure that the client data is protected just as it would in an office space setting. So obviously the people from home want to make sure that they have the security that's going to be necessary for the home office, and make sure that when they look for the security plan, such as looking at the security plan on the IRS website, you could start there, or getting advice on what the best thing to do for a security plan is. You want to make sure that's tailored to the size and scope of the accounting firm And so, according to the FTC, each company, as part of its plan, must designate one or more employees to coordinate its information security program, identify and assess the risks to customer information in each relative area of the company's operation, and evaluate the effectiveness of the current safeguards for controlling these risks. Design and implement a safeguards program and regularly monitor and test it. Select service providers that can maintain appropriate safeguards. Make sure the contract requires them to maintain safeguards and oversee their handling of customer information, and evaluate and adjust the program in light of relevant circumstances, including changes in the firm's business or operations or the results of security testing and monitoring. Please note, the FTC currently is reevaluating the security rule and has proposed new regulations. Be alert to any changes in the safeguards rule and its effect on tax preparation community. IRS Publication 4557, Safeguarding Taxpayer Data, there's a link to that here, details critical security measures that all tax professionals should enact. The publication also includes information on how to comply with the FTC safeguard rule, including a checklist of items for prospective data security plan. Tax professionals are asked to focus on key areas such as employee management and training, information systems, and detecting and managing system failures. The IRS also may treat a violation of the FTC safeguard rule as a violation of IRS Revenue Procedure 2007-40, which sets the rules for tax professionals participating as an authorized IRS e-file provider. Create a tax theft response plan. Report data theft to the IRS. Tax professionals who experience a data theft should report the crime to the IRS immediately so that actions can be taken to protect taxpayers and the firm. The Security Summit partners recommend practitioners create a response plan so that actions can be taken quickly and contact information is readily available. If a client or the firm are the victim of data theft, immediately report it to the local Irs Stakeholder Liaison. There's a link to that here. Stakeholder Liaison will notify IRS criminal investigation and others within the agency. Speed is critical. If reported quickly, the IRS can take steps to block fraudulent returns in clients' names and will assess through the process. So you really want to get this to the IRS. It's not like you're going to go to the IRS and it's just for informational purposes, so they can just tick it off on the list of problems, right? So they can have a stat on it. They can also take actual action on it, of course, by being able to say, hey, these are some clients, these are people that we could possibly see people doing things such as applying for returns or trying to get some type of payment on it, or falsifying returns to get a refund or things like that. And so the sooner that information is provided to the IRS, the more they can be on the lookout for some weird kind of activities such as that. So email the Federation of Tax Administrators and state alert. There's a link to the email here, so there'll be a link to this in the description. Get information on how to report victim information to the states. Most states require that the state attorney general be notified of data breaches. This notification process may involve multiple offices. So then you have the state side of things. Obviously, we're talking federal side of things here because we're talking IRS. They do communicate with the state, but never think that that communication is, really that good, except for certain types of things, right? So you want to talk to the IRS and then take a look at the state side of things and see who you can report to in terms of the states. States, of course, will differ from state to state. So find information at Data Theft Information for Tax Professionals. There's a link to that here. In addition to trying to steal client data, thieves may try to steal a tax practitioner's identity as well, using their PTIN, PTINs, EFINs, EFINS, or CAF, the CAF numbers, to file fraudulent returns to steal even more information. Thieves may even try to impersonate the tax practitioner to obtain tax transcripts or other tax records. Practitioners should routinely check their IRS e-services e-file application to see a weekly count of tax returns filed with their electronic filing identification number, the EFIN, EFIN, Excessive filing are a sign of data theft. E-file applications also should be kept up to date. Circular 230 practitioners also can review weekly the number of tax returns filed using their preparer tax identification number, the PTIN. Again, excessive filing are a sign of data theft. So we can actually look through with our data filing numbers there and see how many returns we have filed. And obviously, if there's more returns that have been filed than we have actually filed, that's not good. So that's a bad sign that our data information has been stolen and possibly being used then, of course, to file fraudulent, most likely, or tax returns that are most likely fraudulent. So back to the text. Preparers with centralized authorization file or CAF numbers that enable third-party access to tax information or representation should keep those records updated. Practitioners should notify the IRS when they no longer need third-party authentication for clients. So the CAF numbers, if you are able to act as an agent for the client, like a CPA or something like that, then those can obviously be abused as well to be used as to get information, basically acting possibly as an agent in that situation to give access to more information. So additional resources, tax professionals can also help with security recommendations by reviewing the recently revised IRS publication 4557, Safeguarding Taxpayer Data. There's a link to that here. And Small Business Information Security, The Fundamentals. There's a link to that here by the National Institute of Standards and Technology. Publication 5293, Data Security Resource Guide for Tax Professionals, also located here, also has a link. Provides a compilation data theft information available on irs.gov. Also, tax professionals should stay connected to the IRS through subscription to e-news for tax professionals. There's a link to here, and social media. There's a link to those here, or visit Identity Theft Center at irs.gov/identity theft. There's a link to that here. There'll be a link to this in the description.